Hi, I'm Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be my March market update. We are in full swing of the spring selling season here in Phoenix. So lots going on. We just had the Waste Management Open. We had Barrett-Jackson. We've got spring training baseball. So there's a lot of people coming and going from Phoenix right now. And a lot of people are looking at housing. The good news is we're also seeing a reduction in mortgage rates. So interest rates right now are at 5.99. We keep flirting with that, but they are staying in the low sixes consistently. So we're not seeing any sort of volatility in mortgage rates, which is really good because there's a lot of stuff happening in the world that could cause some volatility, but it's not. So that is a very good thing for buyers. Most people want predictability and want things to remain calm. So low sixes is exactly where we want to be. We are seeing, regular inventory, and we're starting to see kind of the housing market get a little unstuck. So as a whole, most of the country is suffering from some pretty extreme winter weather, especially on the East Coast. So when I'm talking about kind of the market as a whole, Phoenix is a little bit different because it's super sunny here and quite pleasant outside. So our spring season starts much, much sooner than the rest of the country does, especially in like the Sun Belt states. So as it pertains to Phoenix, what we're seeing is our normal kind of run up or increase in listing activity. I've been telling clients that I think that if we fast forward 5 years from now and we look backwards in time, that 2025 will really be the year that we started to get back into a normal housing market where we had regular seasonality, we had people listing their home, people buying their home, not to the volume that we expect, but still like that first step towards regularity in the housing market. And so what we're seeing is a repeat of that in this early 2026, where we're starting to see increase in inventory, nothing drastic, but sellers deciding to sell. And we're seeing more buyer activity as well because of those lower interest rates. So real estate is always local, but Phoenix is usually a good indicator of what's to come for the rest of the country because everything here starts so much sooner. I'm in a coaching program made up of realtors and lenders from across the country, and I've noticed a trend since I got in 2020 that I tend to experience things 3 to 6 months in advance of most of the other people throughout the country from what they're seeing. So I think the rest of the country will start to hopefully follow suit, where you'll start to see some of those markets that are stuck become unstuck. Those markets where they never really did get stuck, where supply has always been low. So think of your Bostons, your San Franciscos, mainly the coastal regions. Those markets will continue to see probably shorter days on market, homes rapidly selling when they do get listed, because with lower rates, you're going to increase buyer demand as well. So as I mentioned, interest rates have remained fairly calm this year, which is fantastic. So there's not been a lot of volatility in the bond market. And the spread between bonds and mortgage rates has gotten back to normal. Could still trend lower, which would be great, because then that would mean that mortgage rates could theoretically get as low as 5.75 without anything disastrous happening in the markets. And disastrous, I mean recessions, higher unemployment, job losses. If we just get back to the low end of the averages of the spread between the 10-year Treasury and mortgage rates, we could see mortgage rates get as low as 5.75. Right now, they're at 5.99, which historically over the last several years, we have hit that mark and then we pop back up. But every time we do get close to that mark, we see an increase, which we're seeing now, in purchase applications, meaning people applying for mortgages. And then 30, 60, 90 days later, that translates to more activity in the housing market, so we're probably going to see that. What's different this time versus the other times we hit 5.99 is I think this time we will stay there. I don't necessarily think we're going to stay at 5.99, but I think we're going to continue to stay in the low sixes, which we have been for almost this entire year, 2 months, but this entire year we've stayed at that level. So because the volatility has been removed and that spread has narrowed. it's still a buyer's market, so that's a good thing for you. Rates have come down. Affordability is the best that it's been in several years, right? Income has grown, interest rates have come down, home values in most areas have come down off their highs, so that affordability is increasing. I always see these memes talking about how for homes to be affordable, mortgage rates have to be at 2%, or home values have to lose like 30% of their value, or incomes have to increase by, 50%. It's not going to be one or the other. It's always going to be a combination of all three of those factors that increases affordability. So mortgage rates have come down, home values have come down a little bit, not a ton, and people's income grows typically every single year. So every year we get away from the craziness of COVID, the COVID hangover, homes are going to get more affordable. Buyers are going to buy, sellers are going to sell. You can only wait so long to do a real estate transaction based on a 3% rate. So I think that freezing in the housing market that we've seen over the last few years is really starting to thaw, and as we get into 2026, continue to do so. So as a buyer, you can negotiate still, right? We're still getting our buyer clients their closing costs covered by the seller. We are getting repairs done by the seller, including hefty repairs like roof replacements, sewer lines, air conditioners, those types of things. So sellers are still having to do things to help buyers out with the purchase. How long that continues, I don't know, and it's all just based on supply and demand. So if that demand level starts to increase and you start seeing more and more buyers enter the market, then the first thing that disappears are those concessions. And I can tell you from experience that the central markets, so Central Phoenix, Central Chandler, Central Gilbert, those hubs, those are starting to see a lot more buyer activity. So we have clients in those areas and they have faced multiple offers. And when you start getting into multiple offers, those things all disappear and you start having to pay a premium for that property. The housing markets that are on the periphery of the cities, those are still very, very much a buyer's market where you're getting your best deal. Again, right, I think the adage is drive until you can afford the payment. That it absolutely exists right now. So if you're looking for things that are more central, single family housing, expect there to be competition to be able to get less in concessions. The further you go out, the softer the pricing is going to get, and the more favorable the conditions will be for you in terms of getting closing cost assistance and repairs done. Sellers need to expect that they still need to put out a good product. I've been saying that for a long time, so you have to present it well. People are not buying garbage, right? So you've got to have good curb appeal. It's got to be clean. It doesn't necessarily need to be overly updated and completely remodeled, but it needs to present well. It needs to be priced accurately. Buyers are willing to buy, but they're not looking to overpay for homes right now. And then you need to expect, still longer days on market. It is still normal for homes to take 60, 90, 120 days, which sounds like a long time, but that's really 2 to 4 months to sell a home. Most listing contracts are 6 months, and the reason for that is historically it takes 3 to 6 months to sell a home. We've just been spoiled over the last few years where it's much, much shorter. So sellers need to expect, still longer days on market. If you have a single family home, I've been saying if you're averaging 1 showing a week, that's really good. If you own a townhome or condo, that is very much a buyer's market. And so if you're averaging 1 showing every 3 to 4 weeks, that's probably what you can expect. And for those, just expect much longer days on market. When it comes to townhomes and condos, not only are you competing with other townhomes and condos, you're also competing with apartment complexes. And if you've driven around Phoenix lately, there's been a lot of apartment complexes that have been built. And because that supply has increased, those rates have come down. Those apartment complexes are offering, free rent for a period of time. So if you have a townhome or condo, that's really your competition. So those people are choosing to stay in those luxury apartments at a lower price versus buying townhomes and condos. I think that rates are going to continue to stay where they're at. I do not foresee a market in which rates get much lower than 5.75. So if you're someone who has been on the fence waiting for rates to get lower, I think that this is it. I think this is what we can expect. They might get a smidge lower. For them to get substantially lower, we really need to see problems within the economy. We need to go into a full-blown recession. We need to see unemployment skyrocket. I don't think either one of those things is really going to happen. And so I think for the most part, we can expect interest rates to hover between 5.75 and low 6%. So if you're in a position where you can afford and you've been saving and you've been waiting for those rates to improve, that's kind of now. And so, get out there, start looking at homes. Inventory is up. You've got choices. And so the market's definitely favorable for you. So I think 2026 is going to continue to be good. A lot more transactions, a lot more volume in terms of sales for the housing market. And it's going to continue to be a good spring. If you have any questions, leave them in the comments below. Don't forget to give a like and subscribe, and I will see you next month. So we are in full swing spring housing market. March market update, spring. Tongue twister. The Human Torch took out a bank loan.